Hello, everybody, and thank you for tuning in to the Liberty Report. With me today as co-host, Daniel McAdams. Daniel, good to see you.
How are you this morning, Dr. Paul?
I'm doing very well, and
Good.
Guess what, Daniel? We have a very special guest today.
I noticed.
Jeff Harris, and he's an expert on the financial markets. He's been a financial service advisor for a good many years, 38 years, I think. So he knows something about the markets and economics, and he has told me that he wasn't always, the radical libertarian free market guy that he is today, but he's good on the issues and he understands the market. And Jeff, welcome to our program.
Thank you, Dr. Paul. Pleasure to be here.
Very good. Well, I want to start off with the question I always get asked the day after the Fed has a meeting. Everybody knows about the meeting yesterday and the reaction in the stock market. Not that anybody could predict it exactly, but the stocks went down 333 points. But when we lower interest rates, when the Fed lower interest rates, that's supposed to be good for stocks. They've been doing that for years. So what do you make of that? Were you a little surprised it went down that much, or is nothing a surprise anymore?
Well, the world we live in doesn't make sense anymore when it comes to finances. It's kind of opposite world. Good news for the economy means bad news for stocks and vice versa. So I think what we saw yesterday was a acceptance that maybe the Fed's medicine isn't nearly as beneficial as it was once thought.
Right. This whole idea now that's floated around, it's being used, and really we're in it when you talk about real interest rates, when you calculate in the inflation rate, but they talk deliberately about negative interest rates. Our government hasn't deliberately done it, but I believe interest rates are negative because the inflation rate is higher than they will admit. But other countries have. There's like $13.5 trillion of bonds that are negative interest rates. This cannot be a part of what capitalism is all about, but what I'm fearing is those who are from the radical left are saying, this is crazy. See what the free enterprise system do? That's a bit of distortion of the truth, wouldn't you say?
No question. Negative interest rates are insanity. It makes no sense. And the people who depend on fixed income to maintain their cash flow, especially banks and insurance companies who must have consistent, steady cash flow to meet their financial obligations, they're actually going broke slowly. Now, we don't see it, but the day's coming, if this continues for any length of time, when you will see some significant pain in the markets, especially for the pension funds and insurance companies.
And I understand that you have clients that are retired, and it's even a challenge just to make sure you preserve their wealth, under these circumstances. And because you have to anticipate what the government's going to do, the spending, and all the nonsense that goes on. But what about the people who say, well, I have insurance policy and I have my bonds and things. There's a lot of people out there that understand it, but there's a lot of people who are very naive and think they're protected, but all of a sudden they might wake up and the real value isn't there. Either the value's been eaten away with inflation, or there might not even be cash there unless they get a huge bailout. There's no way they could bail everybody out again like they did. So would your concept of this be that maybe this bubble is a little bit bigger than it was even in 08 and 09?
Oh, absolutely. The amount of personal, corporate, and government debt is at all-time record highs. And excessive debt serves as a restraint to growth because all that debt has to be serviced. They've got to pay interest on that debt. So we're looking at a situation where growth is slowing globally. And unfortunately, the medicine that the central banks around the world has prescribed, which is lower interest rates, only works so long. And I think what you're seeing is the market's beginning to recognize that medicine isn't working any longer.
That's it. I've oftentimes compared this to drug addiction. The market wants it, but it's like an addiction. But the addiction, if they don't stop their addiction, then you kill the patient. And I think what you're saying there, if they keep doing this, even though before it's sort of like the counterfeiter hadn't been caught yet, but they're catching the counterfeiter and they're realizing what it is. And even though the dollar holds up, and my answer to that generally is, Well, compared to what?
Sure.
You know, compared to daily purchasing power for somebody that's a lower income and they're working 3 jobs and they're out in the street and they can't pay rent and houses and all. So the dollar is so-called strong with the other currencies, but the rest of the world is not doing a very good job either on managing their currencies.
No question about that. And we're in an environment right now where the hope is that the markets will continue to grow. In fact, Chairman Powell said, we're going to try to maintain this expansion. Well, the Fed's not in the job of maintaining expansions, but they've taken on that authority regardless.
Well, don't you think most of what they do, it sounds like they're directing all their attention and their activity toward keeping stock prices high?
Absolutely, because that keeps the political entities in power. If the people are comfortable and they see their 401k statements going up, oh, everything must be fine. But what about the people who aren't in the stock market? What about the mom and dad who got terrified when they saw the market crash in 08, 09? They said, we'll never go back into that. They're putting their money in something that they consider safe, bank CDs or even corporate bonds.
You know, I haven't seen a number to actually identify exactly how big this is, but we know the money's for free, basically, and it's created, the banks benefit from it, and then the corporations can buy, and corporations will borrow more money, go deeper in debt, and they'll buy back their own stock.
Absolutely.
So there must be, have you ever come across a number where you can measure the shrinkage of the total number of shares? Because obviously, if you have 1,000 shares out and all of a sudden you only have 700 shares, they're going to go up in price. I wonder, have you ever seen anybody try to identify how many shares have been bought back?
I don't know that number, but I do know that up until 1982, stock buybacks were illegal. And during the Reagan administration, there was a strong emphasis on deregulation, much of it very good, but in this particular case, it allowed companies to buy their stock back and actually, in my opinion, artificially inflate the values without really adding any underlying value itself.
Right. And you know, the other thing that compounds this has to do with the Federal Reserve and the whole principle of the fractional reserve system, which is piling debt onto debt. And of course, when you have that and then you have a correction, you have to unwind all that. So all this wonderful thing that has built one on top of the other has to go in the opposite direction, which I don't believe they have control. It'll finally just lose total control, then the big panic occurs.
Well, we saw this past December when stocks dropped nearly 20% in the fall of 18, that the Fed had started raising rates in December of 2015, and they went from 0.25 up to 2.4, and then we had the hissy fit last December. And that proved that the markets could not handle an interest rate above, well, the 10-year was at 3.25, and now we're moving back the other way fast.
Yes. Now, I have one more question that's generalized, and I'm going to get Daniel involved here. It was Einstein who said the most powerful force in the universe was compound interest. You know, you put $100 away and you compound it, and I think a lot of people who understand it, it's unbelievable how that it's almost the opposite of what the Fed does when they, you know, with fractional reserve banking. And this is something that doesn't happen. I can't, and this is a job I know you have to contend with. Somebody's getting retired or they want to save for their kids' education, and it's not so easy. Just, well, stick it in a CD and make 4%. You know, it's not quite that simple, because you make 4%, also the cost of the education is going up. But this idea of compound interest and people saving money doesn't happen. Nobody thinks in those terms, which means that what they're doing is attacking capitalism, because that's where your capital comes from the savings. And I don't see that. Do you see this as an attack on the basic principles of capitalism? And there's not much reason. They disincentivize us to save our money.
Oh, there have been millions of people pushed into the stock market because they thought there was no other alternative. So you have a lot of mom and pop type investors who are in the stock market really have no clue how it functions or the potential danger or risk that they're exposed to, but they'll be finding out at some point.
So since you've been cool to the idea of pumping a lot of money into the stock market, and it's difficult to have a standard of living maintained with just saving your money, then you resort to what?
Well, I'd love to sit here and tell you I had a magic investment that was wonderful, but the fact is that asset inflation has impacted everything, stocks, bonds, and whatnot. We still feel there's a very good reason to have precious metals in your investment portfolio, because that's insurance against the insanity of the central bank.
And is it a chore for you to have a philosophy which is challenging the status quo, and other people saying, hey, I know so-and-so down the street, and he invested in stocks 10 years ago, and he's doing pretty well. Yesterday may have been on your side of the argument, because when you see, and that's just the beginning. So, but I'm sure you've had some people get a little bit nervous about that and say, hey, maybe I should be buying more stocks.
Absolutely. When the markets are going up, everybody wants to participate. But experience suggests that you can have a very rapid decoupling between market euphoria and actual values.
Right.
So my concern is we're going to wake up one morning and the markets will be down 20% or more, and that would be shattering.
A wake-up call.
A huge wake-up call.
Daniel, do you have something here to ask?
Yeah, I would throw out a little bit different, kind of extrapolate from what you were talking about, and something that caught my attention when we were talking yesterday, as the Fed rate was announced, the rate cut was announced, is Dr. Paul, you mentioned, in a sense, this is kind of a de facto ending of the Fed, a slow process of end the Fed by the Fed making itself so irrelevant to the real economy. The other part of this whole equation, it ties in with what we do at the Institute, which is how the Fed enables an aggressive foreign policy, how the Fed enables war to happen. Without the Fed creating the money out of thin air, we could not be in 100 and some countries. We couldn't be in most of Africa. We couldn't be doing all this bombing. And it's interesting because I think some of our allies on the progressive side do get it. And in fact, I was pretty happily surprised last week when Tulsi Gabbard, who's a Democratic candidate for the presidency, signed on to the End the Fed bill. So I think that is kind of a way of, ironically, the Fed, with such malpractice, is kind of creating the Ron Paul coalition of left, right, and libertarians against war. So I just would throw that out there. It's kind of an interesting phenomenon.
I think, Dan, you have a good point there about it happening. And I've always said that there wouldn't be a vote in Congress. We weren't going to all of a sudden get enough people there to vote. We've had some success getting the House to agree on an audit of the Fed. But there's not going to be a vote and get rid of the Federal Reserve. But people now are talking about what Daniel was alluding to, in the self-destruction of the Federal Reserve. Do you sense that that's a possibility that people, I think you've already hinted to that they'll just totally ignore it because, one day it means this and the next day, they're going to interpret it a different way?
Well, ultimately, the market will dictate the rules. And up to this point, the Fed has been able to have a significant impact on valuations, particularly in the stock and bond markets. But ultimately, investors will revolt, and we'll have people who say, I will not buy a bond that's only paying 2% when inflation's at 5%. So when that comes, when that psychological change occurs, that's when the Fed is going to be on very shaky ground, and I think we're rapidly approaching that.
And the question is what will that event be and when will it be? And we really can't target it, but there was a Lehman Brothers failure that woke up a few people a few years ago. But there will be something like that. But I think about the best we can do, and that's your challenge when you're telling people how to preserve your wealth, is that the foundation is very fragile. The foundation is really gone. And the one thing, and you might speak to it, and that is that they always want to blame capitalism and freedom for this, which I think that's exactly what they did in the Depression. They said it was those free market people, and it was the fact the gold standard held them back, and then we ushered in the age of Roosevelt, who immediately stole the gold from the people.
Well, that's a straw man assumption, because we don't have capitalism today in the United States. I wish we did. But what's going on is we have a managed economy. And managed economies are more in line with the Soviet Union and China. They have managed their economies. Now China still is showing a lot of success on the surface, but they have their own challenges, their own problems. Growth is slowing down significantly in China as well. So sooner or later, those chickens will come home to roost.
Do you endorse the notion that there may be a deep state out there that has a lot of influence?
Oh, you sound like a conspiracy theorist.
Oh, you wouldn't buy into any of it. You don't buy into that, huh?
Well, anyone willing to look can see the tentacles of a deep state impacting policies throughout our nation. Yes.
Yeah, it's all over the place, and of course, one thing that I always go back to resort to is, yes, that's all true, but ultimately it's the people's ideology. What do they believe in? Do they believe in liberty? Do they believe in the Constitution? Do they believe in the Fourth Amendment and this sort of thing? And I know that you have some pretty strong feelings about the invasion of privacy for financial reasons and other reasons. I understand that TSA is not one of your favorite organizations. So,
well, no question. The liberties that this nation was founded on don't exist the way they originally were imagined by our founding fathers, and that's tragic. It's totally tragic. And when you have to go through a shakedown to get on an airplane, something's very wrong.
Yeah, and Daniel has a story he's told before, and his own family has been involved with it. So it is very symbolic of the loss of our freedoms, and I don't think the republic disappeared in one day, but it's been eroding for a good many years, and it's been more than 100 years, but it's steady downhill, and yet we still who believe in liberty and the Constitution get blamed for the problems, and that I think is the job that we have. And I think we all have a job to do, and you do it in a practical way of trying to get people to understand the monetary system in order to try to preserve wealth. But ultimately, I think it's the preservation of liberty that we have to deal with. So Daniel, we're going to close, but do you have any other comments you want to add at the moment?
Just on your TSA comment, in fact, I'm tired of TSA molesting my kids, so we're driving to D.C. this year for the conference, the Ron Paul Institute conference on August 24th. It's about 3 weeks away. We've got some tickets left, so get your tickets, come see. Jeff, you're going to hopefully be there.
I'm going to be there.
You're going to be there, and
Yes.
it's going to be a great group of speakers. All we need are you, the rest of you, to come, so get your tickets at ronpaulinstitute.org/conference, and we'll see you in a few weeks.
And
Well,
Jeff, do you have something to close out our program with? I'm delighted you came and visited with us, came to Texas.
Absolutely.
You've been here before, and you have visited us here, and we're delighted that you have a pretty strong interest in the Institute for Peace and Prosperity. That's what we really like.
Absolutely, because once our freedoms and liberty are gone, the world as we know it will be over for our children and grandchildren. And my wife and I have 8 grandchildren, and we're concerned about their future, and that's why we're getting involved. And
Oh, well,
I
that's
encourage
great.
others to do the same.
Great. And I know our audience agrees with that, and I want to thank our audience for joining us today, because we're going to pursue it. Some days seem to be more depressing than others, but there are many days that we feel good, and when Daniel puts one of these conferences together, we really feel good because we get a good turnout and people like it, and they're like-minded people. We get people from outside this country, and we get a lot of communications from people outside the country because they're starving for the same message. So we're very happy that we're able to present our case for liberty through this program, and I want to thank all our viewers for joining us today and being supportive of what we're doing. And please come back to the Liberty Report soon.